First half an hour question. And speak about good things. I have a good list. Including the last questions. And then the next half an hour, particular questions, review was the advice things, how things happen. What has been my experience ever was. I'm skipping a lot of slides from this. It's very, it's just messaging. What did I say? Any answers are good. Honest. So we can start with me. You're very going to start on this. Sorry, you spend money. It's simple. What do we do? Like, what do I check? What is the business you guys do? Any idea? Like anything, to be honest. There's also no answer. And can you be loud, please? Okay, I'm sorry. Investing money in startups to get it done. Why do we do it? Why do we invest in startups? What is the question? Rather than building startups, investing in a startup or building a startup. These are the only two choices. And what's wrong? Somewhere there, but anyone else? Yes, and the new problems what you buy particularly to give someone inspired to reach we have more ideas. Yes, very good. But I'm just yes, yes, you sit on a hedge fund that is you by it's not a hedge fund exactly, but yeah, yeah. So yeah, try to invest. We try to build larger companies. Why so you already have the capital to build larger back large. Why am I back? For a smaller company, in fact. Why am I doing it? That's basically the question. You see what the potential to you see the potential for see the vision of the company. You can help the company to make it plans to get an extra. If you hire returns to the investors, so VCs and PEs, they pool fund. And this one is strong. So let's say I have $100 million. I have to grow them. Where can I put that? Which bank gives 12? Seven. Take my money. Seven. Which bank gives 7%? What sort of fixed, right? So which means I can't take my money out of for at least 5 years. Maybe 1 year, 2 years, at least 1 year. So what else is available in bank? There's something called, but that's not available in bank. Banks sell that. Loan, bonds. For an investor to borrow. So the smallest savings bank now, it gives you about 4 or 5%. And will give some banks. Then there are some subsidies. But 4 to 5%. So it's slowly growing, okay? Then you go to fixed deposits. But it has a condition that I cannot withdraw my money whenever I for a term deposit. Fixed. Should I have? Stocks, what are stocks? The companies which are completely listed. What do you mean the completely listed? You can buy the stocks of that particular company. What do you mean by completely listed? Public IPO. What is it? That is different. Okay, the companies which have stocks in the marketplace where a person can buy. Good. And hold them. The retail investors can buy stocks. So they're listed on stock exchange. So there are two stock exchanges related to large. BSE and NS. Right. BSE and NS. Nifty and X. Small stock exchange, national stock exchange, companies can go list over there. And then anybody can buy the stocks. Capital. We simply share No, 7,000 rupees share or 7 lakh rupees share. If you have that 7 rupees also you can hold it buy a share. If you have a demat account, yeah. What is the risk in the in buying those stocks on the stock market? They can fall. Very good value can fall. Value can become to what? Same. Yes. And it can grow to 1,000%. Yeah, yeah. Whatever option I have, let's say I don't want to invest in stock. Yes, yes. So what sort of exposure do I have when I say stock market? It's called an equity exposure. Because I'm becoming an equity shareholder. The other example this person gave was real estate. Real estate. How much do I need to buy a real estate in Hyderabad? You can spend about 10 crores. Okay, so I need to have 10 crores in Hyderabad. Of 5 crores are 2 crores. It's not easy to get. What is the upside and downside in the biggest risk in real estate? What is it? Yes, it's investment and right now. It will take time to give returns, and sometimes it may give negative returns. And I may not be able to sell it in that point. You could not, it's not immediate, it's not immediate. These are pros and cons. Yes, it's pros. But you have $1 million, you can choice to what are the options? What is the question? How does gold be done? Gold is like based on how it's being used in gold redemption. How will you be? Yeah, yes. How does gold prices be used? What is it called? What is this phenomenon called? It's called demand and supply. Demand and supply. Never house available, house free. Have you witnessed the road which keeps starting out prices would go starts burning in the wedding season? Like otherwise, the largest place can gold is so big. Yes, jewelry. So then asset class. When I put money, we asset class is a risk associated with it. And an upside. There is an option where you can hit a lot rate times, it times this. Then you would wanna invest in that. It's like startups. 100x again. Like startups, all these goes up there. Income. So it's not resolution. They build up. We can grow. Their job is to grow the money. So do you understand what is vision? What is vision? So we'll come to venture capital. It's very similar to that. Has some certain characteristics. So like from my understanding, I mean we know, but yeah. So mutual fund is where multiple people or stakeholders put up the money as a corpus, and again they want to grow the money, and they have certain risk factors. Everything has a percentage, how much you get returns, predefined, and it's kind of little bit secure because so many people's money is in there, and the chances of it going down or becoming complete zero, giving you nil returns is very less, but it's risky as well. Very true. Very good answer. A lot of people come together as retail investors, give the money, and give like a somebody, 10%, 20%, 30%. But they always give a benchmark that this is what I try to do here. Right? So generally the benchmark is the market. 14, 15, 16 could be. So you try to read that however you wish. Right? So just one asset class. Then comes an asset class which is called venture capital private equity, where we invest in companies which have not yet been listed on the stock exchange. Right? Where not every one of us as retail investors can put in money. So you go and catch those companies over there. The reason is because the value of those companies grow much faster compared to the companies that are listed on the stock exchange. So that has been the historical case. So we make a pool of the money. We start investing, we take money from different people. So everybody cannot invest. In India, there's a regulation like to venture to AI. You need to have 1 crore million investment in the market. So it's not for people like us. At this point, maybe we not quite. The reason why it is in 1 crore is because the risk factor is very high. So money can go to the over there, we build a portfolio, investing in these early companies, or maybe late companies, but these are not public companies. So compliances, regulations, so government are there, but they're not as strict as the retail of the stock exchange. So it's my job, take money from you guys, make a pool of it, deploy these companies, uh, make a decision when to invest in which company, when to exit, and return back money to you guys. That's what my access. And in that process, so what is the target return should I have? If I want to do venture capital business, it's much riskier than mutual funds. Right? Mutual funds are even 14%. What sort of return should we expect from me? How much is usually that we try to sign 45. Then how much return do you want? Then what is 10x? 10x is 1 year, 10x 10 years, 10x is 4 years. So how much tomorrow is? That's about 10x is about 10,000. Sorry, 10x is 10 times compounding, right? So in 5 years, when 1 rupee goes to 10 rupee, what is the rate of compound? Not so if your money is growing 14% year on year, how many years will it take to go to 100, no, 2%, right? We take about okay, say 5 years, 5 years, roughly 5 years. So if I'm compounding them in 10x 5 years, how much percentage return is that? Right? Do you think it is single? However, is there a company which can give you 10x in 5 years? Or a portfolio there? No portfolio. There's one asset, two portfolio. That is very risk. So our job is that we will find that one asset which can give you that high return which you are mentioning. And that's what that's my problem. Mutual funds, they're all their best where they invest into the capital can tie up. Bonus they can tie up. That's what we do. That is the idea what we do. It's okay to get some companies killed, mortalities, right? But one of the winners which is making us is what we got is very large. Plus to compensate for a total hand. And if you can give 20-25% plus year on year, 10 years, you are very biggest. It's proper which you in perspective also. For most parts, you go on the IFs, check how many can go against a return more than 20%. You'll be amazed how many are there. So yes, it sounds very shiny. That was when you will go with new age companies and saying 30%, etc. So usually person they are return is different. Yes. So that's better. I always is this one company will be that can yes and it's the same of the also. So that some companies try out it is one company returns. Show the examples for it. And it's important for the study mention. Important thing to do is divide the real mention. So that is for you or not doing is very important. So how large can you become? Why am I always talking about the last of the last technique? There's mathematics, numbers, data. Okay. Yeah, this is just so there's one statistic I'm going to share. Then in US, only 0.5% of the companies are starting. Yes, let's go. multiplies in use. In use. But is such a big deal to us 25 years. So this is a study in 2025 disclosed to these structure. We got the research from there. This was because the Indian ecosystem is not building up. It started with $1 other way. So you have data that's so much. US other most advanced economy so much area. They started the study in 1999 to 20 years. So in those 25 years, the number of companies which started up who received venture capital money was 0. That's it. These are a handful of seed venture. So you can imagine like how it's really splendid because I mean, provided uh, number of companies which went to IP public markets. Um, and as share of that how many companies had venture capital split with the capitals was the case. Yeah. So the number of companies that actually got money was 0.5%. Out of the 0.5%, what those many companies did, I don't know. So it could be given out that if you have venture capital money, but then your business may be very high, high billion. Because that earns your money very, very high. Multiple X. That it promises you advantages. That's the idea behind economics. Hello. Let me descend from you. So when we are talking about what is venture capital, what we guys do, you know, what I do, and I work with asset benefits. I manage the venture capital funds. So it's talking about that what excites venture capital firms to look at companies. When I look at a company, what pushes you to invest in that so what am I looking at? So this one statistics said that zero in 25 years in US between 1995 to 2000, 0.5 number of companies that started up as a business, only 0.5% of those companies corporate started that. But when you look at the numbers of companies who went IPO, was during that particular time, 50% of those companies had venture capital. So when you look at a business, you always look at very high success rate of those companies going IPO. When I say IPO, it's listed on stock exchanges. That's where my money gets spent. For me, my job is to ensure that the money which I'm managing grows with price. I can invest that money in back for 5%. If I invest them in corporate bonds, I can get 10, 12, 20%. If I invest in Indian mutual funds, not stocks. Historically, on average, my body is 20% like that. My job is to ensure 20-25% of you guys are taking this. Because my job is to look at these sort of companies and look at. So all of you, what you're building, you might not need venture capital. So you need to understand what I get to explain to my guys. Then understanding whether your business is which maybe actually need venture capital or not. We will consider first for direction is to take away business, which is future dollars. So it's something that I can give back because you guys are not going to achieve it, so I'm not going to die. But I'll give you an understanding what we do. So this one's listed. Speak on this. This is a global venture capital index. An index of how much percentage the money is returned by some of these firms. This is top two quartiles. The top two quartiles forms terms of returns. This is the entire index. S&P 500, I hope everybody knows it's 500. Is there anyone who doesn't know S&P 500? It's okay. So S&P 500 is something like an issue. Sensex. This is which means a combination of 50 or 30 companies. 50 is 50 Sensex 30. Top 15, top 30 or 300 energy market. Can you combine all of this? A weighted average return over 1 year goes up. It's called the index. So it's a combination of some. It is simple as let's say both of you guys. Okay. You are a portfolio. You want 5 rupees, here 10, here 10 rupees, here 5 rupees. So whatever the average is, say index is average. Those companies combine an index with the weighted average. So that some companies might be operating on capital base of $500. Some of them will be operating on capital base of let's say $10. So what is the percentage return in the index, the weighted average? Is the so this signifies the market return or similar to what an Nifty or an SC in India or a Sensex or BSE India, which is the mutual fund ratio, can be compared to that. It's not S&P 500. Russell 2000 is again an index in US. It's a combination of top 2000. So more broad one. This is a combination of top 500 companies. So it says in a 20-year pricing, there are 7,000, that's 48% of average every year. Okay. S&P 500 return factor 9%. The global venture capital firms is an index. All the firms combined return 30.1%. The top two quartile firms return 6%. Um, and everywhere you will see in 15 years, 10 years, 5 years, 3 years, the top quartile return is much, much higher than the average. Which means our winners have to be very, 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 very large, which propels you to be a person who has returned already. So the look for those companies which actually return a sufficient. There's no rate mentioned most mistakes. These are correlations, diversification, cumulative report. Now, what is a power curve? How many of you have studied statistics given in any of the particular class? You guys have studied statistics? Okay, what's a normal distribution? Anyway, and the data is including money from the mean and mean. Very good. So mean median would have saying when they are saying nothing, it's a standard normal distribution. On both the sides of the same. The returns for the numbers on the left and the right are the same. It's an equal number of losses, profits, gains, losses. This is something called as a standard normal distribution. But PC follows something, the returns on the PCs follow something called as the power law. What is the power law? Power law means our winners, the number of wins will be very, very less. The number of losses, in terms of number of companies which went to loss, will be very, very high. But the returns which the winners give will be very, very high. Even that one company sees so much return at high level price. So, venture investment is failure. So if even if even if I'm failing at most of my startups, that are because they are early stage, it's completely okay. If I feel very counterintuitive and most of my expenses are paid, it's completely worth looking into that. The reason why because I'm looking for that one come from it is so high returns. So this is the actual power. The number of companies, the company which ranks first from the monthly return, is actually more than 10x. It can go like 200x also. Number third company will we have at things returns. So the difference between the top company and the third company will be so exponential. Will be amazing. So that's why I can focus so much on time and so this is the factor that I was talking about. If this number is over here, it doesn't seem like an equal distribution. See, on base, this is how much money the company is returned. Okay, and these are the number of those companies. So see, most of the companies are less than 1.5x. Probably at 1x or less than 1x. So some people say the mean return is 0.8x for venture. But companies return more than 10x are very happy. They take very, very rich. Please check out it. They still company that company, which can actually return that actually. Only and only that you should go and take a coach. Okay. Now this is the report. This is US data between 1985 and 2000. The reason I'm telling you guys to look at this is very important because most of my decisions as founders sometimes come from intuition certain but it should be backed by data. Look at the first column is the number of deals done. Another body single partners, whether this was less than 1x return, which means I invested 10 crores in that return less than 4 crores. For the 2x of 10 crores, and then more than 10x of, let's say, return more than 100 crores when I invested 10 crores. These are number of deals done. So look at the 10x deals, which is not top. Only 6% of the number of deals were done at 10x, which return ultimately. Look at the second column. The amount, the cost of deals means the amount invested. I only invested 5% of my capital in those assets, in those deals which return more than 10x. If you look at the amount of returns, those 6% deals, 5% of capital invested, actually I returned 60% of my money. Which means if I look at this number, which is less than 1x deals, look at I did 50% the deal which returned less than 1x. And the return was not much. So it's okay for me to fail in number startups. It's okay for if a lot of my startups don't return me money. But then one company, two companies need to actually give me a lot of returns. And there is no 10x value. Once your company goes, it's crazy. These are other statistics. at fund level. There was company level, fund level. And guys, in case you feel like this story, then you can please send us a topic. Please let me know. I just want to make you the best of your time. Please guys and compare. Uh, See again, number of 10x deals. Look at the ones which are doing more than 5x. 3 million pool, for example. So different companies, more than 90% of those returns are come from those particular deals. So all your returns for high performing funds comes from that one or two deals, which is one of that one deal in India in the last 20 years. Most of the money. So investors will be. Think about a company in consumer internet in India, which has returned most money. Think about it. Everybody know about it. Under Ether and Zomato. How much has Ether returned? I think Ether has returned about 26x. 26x, which is a large return in the last 15 years. And that's okay. I don't remember the company name. Believe I read the investment gave 5,100. So, what could be angels? Yeah, very angels. Well, let's go for let's just you name that company. Maybe that company doesn't go. Which has someone has. Think about Zomato. Like where people invest. How much is Zomato valued today? It's the largest room Flipkart, for example, for that particular listed. So in the listed space, how much is Zomato's valuation? 12 billion. How much is Zomato's valuation? Think it's around 27 billion. Can you convert that into crores? Take a guess. Anybody, take a guess in crores. 27 billion. Take a guess. It's about 2,70,000 crores. 2 lakh. Okay, just realize that. So basically, 30 billion will become 2,70,000. 1 billion is 80,000 crores. So 80 billion is into 40 to 50. So okay, like plus 27 currently. So okay, to like 3,000 crores. So they created a value, which means 2,70,000 crores worth of shares. So anybody can sell those shares and actually take out the money, spend it. Right? So they created a value of 2,70,000 crores. You know, by like how much that whatever to the side of 21%. But that's the level of money that company generated value from. So if I had invested, let's say the time machine 2014 and let's say 27 crores, how much has my money grown? If you pick out a statistic, how much money, how much value this company has made for investors, and you take out any other return in that particular year, all the companies combined with Zomato is still there. So these are the kind of companies we're looking for. Like, can I invest early in that? That's so much. So I'm looking only for that. Yes. How do you find that? Because at the very early stage, I don't think you will have that new question. Mostly it's fancy. Yes, absolutely right. The first thing we try to figure out is whether can this company its market size is most important. When you look at the scalability of the company, how much revenue can you actually earn? So I always tell people, please, when you start building a company, always it's in public markets first. Look at what sort of companies are being listed over there. How are they earning revenues? See, at the end of the day, what I look for personally, again, it's a very individual choice, not really important. I look for can this company earn large set of revenues? When I say revenues, can actually do business. It's a question of like from poster thing, it's nice to find look very good, it's really fun. But can actually earn money. And say earn money, can it create revenues first of all? Can bring in like good deals, do business, bring in those money. And can you do it for a large extent? Like large pool of revenue. How much is the better and we have something to revenue. I think they in the order of five 2,700 euros. They have roughly around 2.5 $50 CFOs. Right? Look at the pool of revenue able to catch. So that's one thing we look for. Like we look for when we're looking at companies. So how much is the market? Services which they're providing. And they can start small, that's fine. Like nobody knew that Zomato would go into quick commerce of delivering groceries and stuff. So only knew them as a food company. So what I look for is their adjacency in the company, in the capability they're developing, which can be used somewhere else. So always look for that, always look for tended, give it an extent. Obviously, look at the person, this person has another build an institution, this would like you, idea of looking at those stuff and stuff. But it is, it's your market size. This is a lot of slides in these variables. Looking for the specific stuff. Yes. Do you know all these factors? Very does. Yeah. I'll give an example how I use it sometimes thinking. What do you think Uber's valuation would have been? How did people look at that when they started looking at it? And this is what people thought. Like one of the best valuation persons, Mr. Ashwatthama, is considered to be the best valuation. He said Uber should not be valued more than $6 billion into the whole this tag valuation. So what is TAM is what is a market you can actually address now and in the future. Then you develop those certain capabilities and then you devise your market SAM and so on. So you forget it. It's considered TAM. What sort of market can actually go out and capture it? Can operate. This person said that they can only operate in New York taxi market per se. They said they're not able to go to other cities or the country. And this can only do taxi business. But what other business it do? Right? Food. Build a company which can deliver food also, right? It may be successful, may not be successful, that's fine, could have been other reasons. So Zomato, for example, what other businesses can you develop? Give me an example. So what is the okay, also you should look at this as a responsibility. What is the business? So now it's been changed for the restaurants. One by one, sorry. Ashish, Vista House also a restaurant. Shag House also. Shag House. They're aggregator. No, they're just reviews. Sorry, go ahead. You just did reviews. Which is okay. The start. What is the business today? Then talk to business. I thought you had talked to. It's not talk. What else? We'll come to it. Good answer. What other talk to businesses? So Zomato was big. Yes. Go on. Yes. What is it? Go ahead. They address this food delivery prospect. It is not aggregated of restaurants. It was before the past. What is the point here? That it can deliver full hot food for you within minutes with certain level of service that will not spill over. So this is a flexibility. Do you think any other business which can do it in one city? Which can give you hot food from different restaurants and it comes to within time. Not disturb non-eaters and put other cases. Good in India. Yeah. That's why I started. Actually, there were many maturities continued. There were many, right? But they won somehow because they developed this capability. Then they go to a restaurant. 1% of the network can go to a restaurant. Become the full delivery. That is the simple job. Think about it. They create such a large business. Where can you extend this capability? Which they have already. First, exactly. First it goes to a grocery store. Now, for that matter, they dark store. And pick up the food or whatever the items over there. Be any of the items. Deliver it, you guys. Profit it in long run. But what is the again looking at the market size, for example? How much is how much is India's GDP? This you have to be very this. How much is India's GDP? Right. What is the return? These are basics you need to know. How many studies from us? Did anyone is actually not by that close? From tell me, tell me this. 4.1. This is the number which this is 25. 25. You constitute this 4 trillion. Any idea where does this 4 trillion come from? Anybody who studied economics over here, 11, 12, graduation? No. You studied? So what is GDP? Any idea? It's fine. So I if I tell you and tell the exact number. So it's not. Somewhat else. So I think that's gross domestic. But close to it. Because things are the final value of products and goods sold. Products and services, goods and services sold in a country, final value. So it would be great. Journeys also, but the final value of the product sold is the GDP. How much is retail consumption? When I say retail consumption, what does it constitute? This $4 trillion, what does it constitute? Where does it come from? What do we do? What do we build on this $4 trillion? You have $4 trillion, right? And I'm saying this is the final value of what the goods and services sold in the okay. So some things are getting sold over $4 trillion. The economy. What are the things? They have probably yeah. Businesses and the revenues is one of the worst. Exports is one of the worst. So the consumer business in India, it's the retail consumption. You guys really consume the super internet. So Zomato suddenly, when they supplemented with deep services, they unlocked a value of $500 billion of market, which is a capture. So this is the level of market unlocking they did. When they developed this category. Earlier, they were only in a small market where you can take food and deliver it. When they extended to Blinkit, when they acquired Blinkit, they added additional $500 billion or $600 trillion of market that they can take some pie of this one. That they can deliver some products out of that 1 trillion which is existing and take it as revenues of their books. What is the new service Blinkit has done? Can anybody tell me? Service. Yeah. And it started like 3 months back, but which I never thought they'd do. So in eight tracks, they yes, we zero percent. Or Blinkit will bring zero percent interest there from day one in Blinkit. It's not sometimes for how uh, I used a year ago. So yeah, they started 3 months ago, like big developers. Complete fine. It was not since day one, is what I was. They started with grocery. Was it since day one? No, I don't. I also don't. No, it was a very big news. That yeah, when they started. I think it was mistake. In my opinion, is what I think they are not like day one. It was 20 million very last place. Okay. For think that their capability to deliver one item is no other can add swings. This is on top. And they added printing. And then figure out printing is a problem. It's actually a problem. Yeah, actually. I can't go out and just find cafes, give them my email ID. But also secure data. So when you rebuild the processes, India already those kind of issues there. Which other people can't get. Or it is difficult. It's difficult moving one product to this to this. Can you do it? If I want food right now, the shah house like a biryani, can get only that it scales. Yes. Only that easy. It is easy to get scales also. Distribution is sensible. How many million orders do they do? Less, yes. Yeah, we will get some of the number. They run more than population. You know. Yeah, it's basically there are particular customers ordering everyone. Particularly number of orders, 3, 4, we will around your house. Then through scale matters. What a break. Go online, get Flatos quarterly reports. You'll find them under the investor relations. They tell you how many orders they do, how much revenue they earn on every order. These are stats. That's how business are made. So my job is interesting. So okay, I have a question. Yeah, so I will start as per I that Zomato was using a process capturing very well. Because normally when someone starts with business, they think they should be profiting from here. Even though Zomato was doing was losses, so they didn't feel even why is it? What? Yeah, so like how do you show your company? It's the vision that you have. Because Zomato did a very good job of showing the value after a certain time having that vision. You just starting out now, being at that stage, even though there are losses, how can you show aggregated value moving forward? Learning. Good question. So honestly, most of it happens. And whether you start a company and when you think as investors come this. 29%, if you follow that thought process, for millions to company again, things great. Because most friends know that's the thing. It's how we should say this. I have always been in the share perseverance and fighting all of the competition. We had very sort of activities. Let us start out by seeing can this become a very large enough? So that's what one element you go yesterday was there. You were talking about the panel. One of the last statement I mentioned to you guys. And you get lying market. So I keep looking at the market. What sort of companies get sort of value? If you go in the market and sell this back, at what price you can sell it? There's a way to expand price. Yes. Similarly, there's a way to aggregate value of financial securities in the market. A stock value of Zomato has a value ascribed. So one person is willing to pay right now 100 rupees for a Zomato stock. It could be three also, it could be 3,000 also. What is again the living value at 300? A stock of Zomato. How do you figure that? Okay, uh, P is one method of fine. This building over there, right? It has a way of ascertaining its values. What is it? How does it get the value of this space? The area, the land, the proximity to say businesses, demand supply of the area, the commercial restrictions, closeness to the airports. All depends on demand and supply. Will it do good? For two side or three side of the regular. Similarly, for financial security in case of interest. Can it generate large cash flows over time? Is the question. It's a financial institution. My idea was Zomato as a business can it generate revenues from which I deduct expenses and it leaves certain profits or cash flows first. Can it generate large profits? And can it do for a long period of time, sustaining it within a specific period? Then today the stock value of that Zomato can be very, very high. It is as simple as that. So is your business driving large pools of revenue? What can you contain? And that's so very, very large. If you as a business you only do $10 million, then you become very, very successful, probably it's not much. Because they look for those extra hazards. How much should a business do over some next 5 to 10 years so that his venture capitalists become interested in this to look at them? See, the thing is, in my opinion, this was my opinion, is your company the first sheet which I showed you, which was number of IPOs versus the subtitle. Can a company go public? Is the question. For it might not go public, but can it get acquired? But historically, the highest money made in any company by a vegetable industry is through IPOs. Then acquisitions. In India, the acquisition market is not yet very deep. The IPO market is starting to become very, very good in the last 7 8 years. It was not also very good. So before COVID, did you see any companies listing? There were companies listing, but you did not. You were not tech companies. But after COVID, they started listing many reports. So now people have started understanding. So think of your company can list over there as the first thing. Create a large vegetable now. For it to list, what do you need to list? So you need to look at companies on which are listed on stock exchanges. Not the largest ones. Look at a mid-cap index. Which sort of performance do they have? How much growth are they doing? Can someday you reach over there? Is how I look at it. Is one of the questions. Also, it might sound a bit complicated. It's completely okay. Can basis calculator and video? Yes. But the point is you have to do it successfully. So for example, what is the time like a new timeline for a company? Then they started at year one. According to you, at what time they should in an IPO? Yeah. See, my fund is for 10 years. Okay. I can lock the money for 10 years. It means I'm starting to running. So after 10 years, even the company does not want to they should start taking out. So generally I go for 25 years legally. Okay. It's okay, I stay sometimes longer. The company is not but the initial content I do is after 5 years you get some other investment in the company. So it comes with a lot of terms and conditions. Yeah, it's so the thing is, when I say how much time it takes to write a drawing, any of this started. They started by 2009. Very useful to this. Companies can also digit started 2017, went into 2023. So if the companies they will for you, then we are okay to hold again. This even after the locking period, the company is going that you have the price. Yes. Even more or 5 years also, you will get more returns. Yes. Yes. See, as a always look for, first of all, is your business how to differentiate the passion from the patient practicality. Look at it that whether your business can actually earn revenues. See, at the end of the day, what I am looking for as an investor is looking for the saleability of the asset I am investing into. So if also it is not easily sellable, I cannot sell a private company shares so easily. They are not the buyers out because they are on the listed. So that one company which has to do good also, if the company is doing good, it will sell. It's okay. And the easiest way to sell for scaled doing well companies like. So that's why I say I use a very so look at the can you do the revenue? Also a question of is it okay to sustain large losses and still show value? Is it the ultimate price is large? So for Zomato, let's say the ultimate price, how large is the ultimate price? It's $27 million. How did they calculate that kind of trade? Because it takes I'm asking honest question. Very good question. Look at similar companies listed on storage or outside globally. So like could be that kind of similar business. Let's say there was no business like smart healthcare. That's why the public market investor took some time to understand. But there was in the US, DoorDash. But you have to compare like what are the differences. DoorDash, for example, the EOV is much higher. Like for like $25. Yeah, it's all these EOV is average or higher. That's not like the DoorDash is much higher $20. Understand the businesses. Right? Understand how money is earned in a business. How do you get like accurate unique economics of these? They publish it. Somebody publishes it on their website. It's completely available. Or something like companies. Data. The competitors might have. That's why they're doing the business. Understand what it is. The competitors, if they're listed as publicly available, right? Just unlisted, you can find some source of kind of that can actually help you understand this is what the police made business. What business are you thinking? I am into like the infrastructure of education technology. Infrastructure of education technology. For example, can you give me an example? Yes, real education. Real education. Real education. That's one of the biggest company of the UK. Okay. What is your infrastructure? Can you tell me about what you use? Yeah, SaaS. It's don't give me jargons. Give me very basic what you do. Okay. We provide unto an institution where the faculties or the stakeholders inside the institutions can make their life much more easier and provide a lot better support to students. Okay, so it's a software tool, it's a hardware. No, it's a software. How do I, where would I put that software into? In the laptops, in the laptops. The laptops, right? Would it be a teacher's personal laptop or no, schools? So if it be schools, you can log in from different devices and manage it. Okay, but it will be account. Where would I use this? So what would I do using this software? So normally, as in faculty specifically, you would optimize the works because in type 2 type 3 colleges, faculty exam. Okay, making Excels. Excel is a good to do something. Give me an example. What would get easier if I use it? Okay. I'm a teacher. I'm teaching you guys in this system. I go to tier 2, tier 3 also. It's what would be? For example, an HOD of a certain department has taken something like they have given a notice also. There will be top decisions. Second thing is you can manage your students better by understanding their uh, things like how much the syllabus is completed, what's the performance, what's the engagement, what's the attendance, are there any gaps? Okay, let's go back. You say HOD telling different teachers this is the notice. Yes, it's one is one teacher. Yes. Do you think standalone people will pay for it? So our complete, let's say complete. The second thing you said, it understands to help you how much analytics of student performance. Okay. As well as we also provide institutional analytics to the chairman because when the institution is paying lakhs and lakhs to faculties and they don't know what's been happening at the ground level of teaching. So now is the product for teachers and the product for institutions? The product is for institutions. For the institutions. Institutions and it can be used by every stakeholder inside an education. Very institution. Is it to help the HOD with to help students or is to help? Its ultimate outcome is student upliftment. Better impact. Uh, People are paying for this in Taiwan, Taiwan level. Institutions will pay. So the institutions will pay for it. Yes. How much the institution pays for it? Our pricing, if we are keeping it less as 80% then market value, take 800 rupees per student annual. From a school, how much money can you take? From a college. From one particular school, let's say. Is for school or college? Higher education. Yeah. How much money will you make out of a university or college, let's say? Per year, if we cost least science is 2000. So we can make 16 lakhs in revenue. 16 lakh. How many universities are there? 58,000 plus. You said almost 58,000. We think very hard. Yes. So I don't think so. We can because there are some universities who are self-sustained because they have built their own things. So give them a point to teach. Yes. So the 1% goes to 580 colleges. that we can. How much was the price? 16 lakhs, right? You can I mean, 1 year, 16 lakhs. 16 lakhs. It will be every year, right? 16 lakhs. Yes, annual. Give me a number of institutions you will set in next 5 years. In the next 5 years, we have a goal of reaching 5%. Number of institutions. 5 into 5. Yeah, 3900 each. 3,000. 3,000. 16 lakh into 3,000, how much is it? So, can you please calculate? Should be will have it, but already it's okay, it's okay. 1600 into 3,000. 16,348. 1,000 is three zeros. And 16 lakhs is 5 zeros. So 8 zeros. 48 into 8 zeros, which is 40 crores. This is correct. Yes. 40 crores. Yes. And how much profits can you have on 40 crores? So, the total cost of what, how much is it take from? So, takes our margin of profit will be nearly 70%. That's gross. But at the end of the day, everyone, all the expenses combined, and nothing else to pay for it. Say 70%. No, no, no. No. Then, final margin. Final margin will be somewhere around 30 to 40%. That's also very high. Because we are able to bring that much. Okay, that's a 30%. Oh, yes. But can you do it from day one? Yes, actually. It's fine. So basically, you have 30% or whatever you sell for coming back to your company, right? Yes. So why do you need that money from us? Because the development of our product. So then how can you say it's a 30% rate? I'm saying, can you say 30% from day one? It's the question, like meeting all the expenses. Can you say 30% from day one? From the first college that we applied. You can say 30%. But in the starting, we make losses 100%. So we what we try to do is we fund those losses. And we see that in the beginning, when you start at let's say when you reach 3,000 institutions. If you reach 3,000 institutions, that's great. Why not? Even if you reach, because that's 3,500 crores of revenue. Yes. But we see for the period that you will have losses, you have need money to fund those. So we come and give you money for those ones, for losses. So we'll have some capital deficit. Okay. So we'll give you money for that. We'll take some stake in the company and we'll see after 5 years how much your company is worth. Anything of it. Okay. Let's say you'll have 20% profits. So you will have 100 crores of profits every year. So market has a way of valuing your stock. If you're going to make 20% every year on year, and value at 20 so the profits, so you value at 2,000 crores. So if I give you, so as a VC fund, I will give you like $3 to $5 million, which is like 40 crores, 50 crores, 40 crores. And I take that's a 10% of the business. 2,000 crores, the value is around 5 years. If I hold 10%, it's still there, and my value is going to 100,000. So I think 5x in 5 years. So that's the math I'm doing. This is how I think. This is how achievable things. But for you, in best case scenarios, 5x. Yes, yes. If I think of it. But if it increase the valuation, if I put 40 crores, I get 20% of my business. Then my multiple is 10x. Right? So this is how I do the math. Should I take more stake? Should I take this stake? Okay. I like the math here. One minute. Okay, this is now unit economics. Yes, that's right. Now coming more into what are the offerings. Is it viable in the market? What is the team? What is this stuff? How do you evaluate these things? Like because you evaluate everyone from founder to what the team is, what they have done so far, how much they have developed so far, and how what is the development. Got it. See, the thing is, I look at your product. Then I go to universities and I ask, do they need it? And I speak to 20, 30, 40 universities before. So I speak to everyone and give the diligence whether this product is required and people willing to pay for it, whether there are other alternatives, are they self-sustaining as you mentioned, whether they need this product. So once people want to build over the topic. There is one, let's speak people in your team. See, the thing is you can reach 500 crores, but there are certain impediments, the risks involved for you to reach 500 crores. I will try to understand all of those risks. One risk could be that industries will not accept your product. They say, okay, it's too complicated, it's too simple, I don't it's too expensive, it's too cheap, it could be anything. But could be universities don't grow at that particular pace, I think. The, uh, the market trends that's been happening and the adoption of new technologies into these sectors, we also try to do it. Because the thing is, I mean, my only job is to accept communication everything. That's it. The capability of saying, is one part. One part. My job is pretend only to understand every process of preventing, whether that's important. If technology is an impediment, I think it was not even. Then I'll ask you, do you think this risk can be managed in the next 3 4 years? If your answer is recently, I might take a bet. So for me, it's a bet. Normally, like you take a bet at what stage? We started seed and we start. Generally, we take growth stage we as an investor. So growth stage we generally cover on Series B, Series C, then you have start taking it. That means vertical to deep tech startups. We come up with deep tech startups also. We are trying to understand the product first and then when it will work out. It's a bet. And then we take a portfolio of those bets. Because everybody of it might not work. Other companies who have tested, yes. What is the code? And that we do not that. Well, how we get these results? I don't believe. No, so I should have answered. Because suppose you are going to take a technology picture. You will see other portfolios. Other company investments of similar startups as well. That is not good. I was saying, like, for example, I invest in your company and I invested somewhere. May not, maybe in your field, may not be. Okay. But overall, as a pool, I should be able to return money. That's my target. That's it. Any other question? Yeah, please. See, there is an idea being relatively. And like these potential companies. What parameters the basic JFJ company? You have asked those questions. You ask similar questions or what's it's not very time. Yes, I only job is to figure out when these started in your business. Which private rules is decent, but does it have capability someday in the future with that capability to start on? That's yes. Well, that would not oversee. I'm like, those who are really make this. No, like, how do I be? How do you like, how good are you? See, the thing is, good question. The category doesn't exist. I said, what will it take for this category to start? What was the most important point for Zomato to succeed? Tell me this. What was the most important point? That's fine. That's a jargon. Tell me in simple English. People label. Can you please elaborate what it is? Can you please elaborate? And people, I'm not asking to repeat. Please elaborate. People don't want to spend time on it. They want it to be kind hard or even else to do it. So the actually easy typically was happening. Like was it happening for somebody present to me? Yeah, that was right. Students. Inside here, no, we here, houses and we live.